I used to sprint from salary to salary, every month feeling like I was on a hamster wheel. Money came in, almost immediately it flew away, and I never felt ahead. Then one morning I looked at my bank account and realized I had $0 in savings, no passive income stream, and a net worth that was barely above zero. That moment shook me. I decided I was done living paycheck to paycheck. I remember the turning point. I opened an online brokerage account, stared at the dashboard of my first trade in a dividend-paying ETF. The ticker blinked, and I realized this wasn't just a trade. It was a promise to myself. I will build equity growth. I will create capital appreciation. I will stop being subject to someone else's payroll cycle. I shifted from being a consumer of cash flow to being the architect of my financial future. That week I diverted $500 of my income, not for a gadget or a luxe car lease, but into an index fund tracking the S&P 500. I told myself, this is invisible income. This is unseen compounding. Over time, this habit became a rhythm. I automated contributions to my stock portfolio, diversified with a mix of growth stocks, value investing plays, and added bonds for defensive positioning. I positioned covered calls inside my allocations and even spotted a slice of an inverse ETF as a hedge during market volatility. The key: I turned passive income into a monthly recurring stream, and I shifted from surviving month to month to strategizing for decades ahead. It wasn't easy. In the early months, I saw my account drop during a bear market. I felt doubt. But I remembered that compound growth doesn't care about instant gratification, it cares about time in the market. I asked, would I rather be perfect today or wealthy 10 years from now? I chose the latter. I read books that argued delayed gratification is the real wealth psychology hack. I created what I call the empire model: earn, map, plan, invest, review, execute. That framework became my roadmap. As the months rolled, I stopped checking the day-to-day balance with anxiety. I had built an emergency fund. I had exposure to dividend stocks generating monthly income. I had a bond ladder for safety, and the rest of my portfolio was allocated to ETFs and mutual funds for broad diversification. I realized that when you stop being price taker and start being wealth creator, your mindset shifts. You stop worrying about the next paycheck and start looking at your retirement portfolio and early retirement goals. Here's the truth. Many don't tell you. Living paycheck to paycheck isn't just about low income. It's about no algorithm, no system, no plan. Once I built the system, the automatic transfers, the asset allocation, the reinvested dividends, I moved from survival mode into growth mode. My net worth started climbing. My passive income rose. I stopped tying my identity to job titles and started tying it to my investor identity. Now when I get paid, I don't ask, how much is left? I ask, which part goes into my future empire? Because I know that every dollar diverted into smart investments today becomes the soldier in my long-term wealth-building campaign. Stocks, ETFs, index funds, mutual funds, they all play their role. Dollar-cost averaging replaced emotional buying. I upgraded not my lifestyle first, but my financial infrastructure. If you're watching this, and you feel stuck in the same loop, ask yourself, are you chained to your next paycheck or free because you built invisible income? It's possible, it's real, and it starts with choosing your investor identity, automating the flow of capital, and riding compound growth until your paycheck becomes optional.